Well, the market was open yesterday. Futures are trading today. We have concerns over a flattening yield curve, signaling an economic slowdown that helped to cause the major market damage that we saw. The spread between the 2-year note and the 10-year note hitting the flattest, the narrowest level since 2007. Let's bring in Doug Flynn, CFP of Flynn Zito Capital Management, and Joseph Schrock, Chief Investment Officer at Nova Point Capital. Gentlemen, good morning.
Morning.
Doug, read the tea leaves for us. Do you think this is signaling a recession or just a slowdown?
Well, the 2-year versus the 5-year doesn't necessarily indicate that
that inverted.
That inverted, and that isn't necessarily a good indicator of a recession. More people are looking at the 2-year over the 10-year.
Right.
Really, it doesn't do it either. The 1-year over the 10-year is a big concern, but we're a way away from that. And also, what I think is a better indicator, which doesn't get enough a look, is the leading economic index. That has a very good history going back to the 70s. Every single time, the last 7 times that has been negative, that has signaled a recession in 6 to 8 months. But last month, it came out at a positive 5.9%. So while it's indicating that the Fed may not raise as much over the next year or so, it isn't indicating a recession just now. It's just the fears of that, I think.
You know, Bank of America, Joe, is calling this the bear market vibe, and they expect that vibe to continue into the new year. What do you make of that, a bear market vibe?
Well, you know, I think people latch on to momentum. We certainly saw a lot of momentum selling yesterday. We saw it accelerate, some of it programmatic, some of it individuals making investment decisions. No, I think it turns. I think the consumer's healthy, and I think the Santa Claus rally can really turn the tide here.
So you guys just don't seem that concerned from all these flashing lights that the markets are sending us. I mean, investors were seeking safety in such a big way yesterday. Utilities, Doug, were the only higher sector. Best day in a year.
Yeah, that's true. But, but that's because the economists have predicted 9 of the last 5 recessions. And we always talk about why astrology was invented. That's just to give economics, some legitimacy as a science. But realistically, the point is that there's a lot of doom and gloom out there, and the momentum. He's right that was riding things down. But if you peel that back, you have corporate profits after tax profits up 20% year over year. That is tremendous. And the consumer is up 6% with after-tax increases in their net earnings. And most people haven't even felt the effect of the tax cuts yet in their pocket to go spend yet. So next year is going to be a better year. It might not be as great a growth as this year, but things are not all that they seem as a negative. Yeah. So this is more of a trading scenario.
All right, and now we get a big reset moment, if you will, because the market is closed today. Doug, Joe, thank you, gentlemen.
Anytime.
Thank you.
Well, the market closed